And welcome back to Dukascopy TV. I'm Monica Gibson and I'm joined once again in the studio by Jean-François Owczarczak. Today we're going to be looking at the four main cornerstones of trading. Jean-François, great to see you again.
Thank you, Monica. Nice to be back.
Definitely. Now we're looking, last week we were talking about flight to quality. It was quite apparent. So what's happening this week, with the main cornerstones, the main assets?
Okay, well, I just wanted to go back on the mosaic we had last week, which we had done especially for Ukraine. And we could see on that Monday afternoon that it was flight to quality. The euro was a bit down, dollar yen, the yen was stronger. We could see a dip in equity markets. Well, the week brushed off this Ukraine news quite quickly. And now we could see that although the Moscow index is still down and seems to be possibly resuming its downtrend, all the other assets are back in risk-on mode. So it's unfortunate to say, but it seems like the world is focusing back on the macro, and that Ukraine may come back to haunt it, but at the moment it's not the hot theme.
Okay, no longer. And
so if we go back to our standard mosaic, and into our favorites, into A for Dukas. I just wanted to go over the main cornerstones of our asset allocation, namely Eurodollar, namely gold, namely Treasury bond futures and S&P futures. And so let's start with S&P futures, and we're going to show here an investor's view, which is a longer term view.
Okay.
It combines free charts, it combines weekly long term, a daily medium term, and an hourly short term. And at the moment, all three are heading up, which has been the case for most of the last year. What we could see is that on the weekly, we're still heading up. There's still quite a lot of potential, although over the short term, we could see that there's quite a lot of stress on the envelopes, meaning they're touching each other, and our risk index is well in the red. So we think there's probably a few more months to go, a bit more potential, and at the moment the weeklies are still in an uptrend. Similarly with the dailies, maybe a bit of an exhaustion at the moment, so we could expect some consolidation over the next few weeks, but in general it still seems to be in an uptrend. And on the hourlies, similarly, we've reached a first leg up, a few days of consolidation here, but it seems like we could still move higher. So equity markets are still good, probably into the second quarter, and we're getting towards expensive levels, but for now the trends are still in place.
Okay, as they were. And
now let's look at the euro, because it is marrying this risk-on attitude. We see that there's still quite a lot of potential over the weekly chart. Well, we're just out of a base, so let's not forget it. That's a more longer-term projection. What we can see over the short term is that we're also slowly getting into exaggeration. Our targets have been fulfilled. If you look here, we're getting close to our target zone. Our envelopes have touched each other several times. The risk index is well in the red. So it's probably not the trade now that we up above the 138, close to the 139 level. It's probably not the best risk-reward trade at the moment.
Okay.
And that could also be said because we've also reached our targets on the hourly charts, which have gone up not only to reach their own exaggeration, but also are in our target range. Now, just wanted to conclude on rates and gold, which are pretty much in a similar movement. I mean, what we've seen is that both are in downtrends over the weeklies, and these are the dailies which are correcting up. And we're slowly getting towards where these correction ups could turn impulsive, could create a stronger move. And these are usually strong resistance levels. So we think that at the moment there's going to be quite a lot of work to do around these levels. So on rates, let's get it onto the screen here. On rates, we're in a correction down, we're correcting up. The resistance levels are around 135 on the 30-year Treasury future. And as with resistance, it seems like the short-term trend is moving down again. So it is also an opportunity probably to resume the downtrend on rates here. And if we look at the mosaic again and quickly flick to gold, where we see a very similar situation, basically we've seen that gold was in a bear trend most of last year. It is still in place. An intermediate bottom is well shown here by the risk index, which is well in the green, and the correction up is slowly getting to a point where it will either break above the 1377 and create an impulsive move, or hit against this resistance and move down again. And this is what we really need to watch over the next days, weeks.
Definitely, gold is always very interesting, but thank you so much, Jean-François, for coming in once again. Pleasure to speak to you. We'll see you again next week.
Thank you.
Thank you. Okay, well that's all from Jean-François and myself for the moment. Make sure you click back to Dukascopy TV for the hourly updates and exclusive interviews. Goodbye for now.